Good morning, I'm Raine Musñgi and welcome to Follow the Money. Join us as we explore the tools and insights you need to jumpstart your financial journey. Luxury properties. It's tough to find the fine line between treasure and trap in the luxury real estate market. Are these high-end assets a sound investment or simply overvalued indulgences? Joining us to explore the allure of luxury properties is David Leechiu, CEO of Leechiu Property Consultants. As a leading expert in the real estate investment space, David can help us navigate the pros and cons of owning luxury properties. Good morning, David. Welcome, and thank you so much for joining us.
Thank you for having me here.
First of all, can you share with us what the locations are of these high-end properties right now, and how are they doing in terms of marketability?
Yeah, so I think all over the world, the luxury assets have been the most resilient asset class in the last 5 years since COVID happened. You've got the top 2% enjoying flowing money into these assets. In the Philippines, that would translate to locations like Forbes, basically Makati, BGC or Bonifacio, and Alabang, and some parts of Cebu, some parts of Iloilo. I think a lot of money has gone into Palawan, speculating on how prices are going to be there. A lot of money has gone into Siquijor and Siargao, and now our bright spot is Bohol. Of all the properties that we think is going to start accelerating in the next 20 years, it will be Bohol, followed by El Nido.
When you say luxury properties, high-end, what kind of amounts are we talking about here? And what kind of people or target market draws these kinds of properties? Yeah,
the luxury would probably be in the 50 million peso range and up. The 50 million range would be like maybe a small 2-bedroom, and typical units would be about 100 million up. Your typical Forbes Park house today is 1.5 billion pesos for the lot without the house yet. So the house will probably, be another 300-400 million.
Understood. Well, do you see a lot more foreigners investing in the Philippines, or are we still talking about locals here?
I think the next 10 years will be all about foreign money coming here, because there's an incredible amount of wealth destruction that has happened all over the world since pandemic. It's pandemic, it's inflation, it's interest rates, it's wars and instability that's driving capital to look for a safe haven. Much of that safe haven is in U.S. Treasuries and 7 tech stocks in the U.S. The balance is allocated to adventures capital. And that adventure capital, some of that is finding its way in Philippines.
Right, but so normally an accountant would say, of course, properties are the only ones that appreciate over time, long-term and sustainably. But right now, valuations are so high. Is that still true at the moment?
It is still true. So first of all, I'd like to call out a myth, that say, a lot of people say, oh, you'll never go wrong with property. Well, you can go very wrong with property. And of all the asset classes, property requires a lot of debt to grow. And if you borrow too much, you get into a lot of trouble. And that's the case across any business, but more so in real estate. Second thing is that in real estate, time will correct your mistake. You might make an investment today that you will realize is a mistake, but if you have the holding power, time should correct that mistake. And asset values will appreciate over time. It won't appreciate all the time. There will be times when prices will come down by 50%, 70%. And if you're bold enough to enter the market at those moments, you might be rewarded by a big uptick later on.
Right. So off air, we were talking about the property bubble. Would you say that there's bubble that's bursting in the property market. You were saying something along the lines of, yes, there's an oversupply at the moment. In terms of valuations, are the property prices too high? Is there an opportunity for them to come down? Are there certain locations that have received too much attention in terms of development? And now, especially since people are going back to work, are there locations that are more saleable?
Yeah, I think we are not in a bubble phase yet. A bubble needs two things. One is an imbalance, a dramatic imbalance between supply and demand. And the second thing is a lot of debt that's fueling massive capital appreciation. And then when the income doesn't come in, then people are not able to pay their debt. So the default rates have to go up. So overborrowing and then not being able to pay your debts and then defaulting. That will lead to a massive drop in asset value. So I don't think, so we do have a supply-demand imbalance. There's too much supply in certain categories. For example, mid-end condo space, that is an oversupply situation today. And then, but there's no oversupply in the high-end space right now. Second, the debt levels. I think the debt levels are high in the mid and lower end of the market. But in the high-end market, it's not the case. So the asset holders of high-end property are very strong-handed. They have very little debt, they have high savings. Their main business is still producing a lot of cash, and that gives them a lot of holding power.
What kind of, sorry?
And then that holding power is allowing them to hold the price and ride the tide.
Well, so in terms of the high-end market, what kind of properties are they looking for? What is there an undersupply of?
Yeah, I think they're looking for luxury assets that are priced at 50 million, 80 million, 100 million, 200 million peso, 1 billion peso transactions, and where the supply is very, very scarce. There's probably 15 properties, for example, in Forbes that's for sale right now, and most of them are asking very high prices that buyers are not willing to pay. And because they're not willing to they're not getting the price they want, sellers are saying, okay, I'll just wait. Okay, I'll just wait. Okay, I'll just wait. And there's no sense of urgency or need for them to price down. So that's a reflection of their strong holding power. There's no urgent need for them to kind of give discounts today. It's not the same for the middle market. So I think the luxury end will continue to keep outperforming all the other asset classes. Now, is there an event that will drive even the luxury prices down? It's possible, but I'm not seeing it yet. The world is in a messy place right now, but the top 1-2% seem to be able to avoid any distress for now. And we might complain today that asset prices are too high in the luxury space, but I can tell you that that is forever the sentiment of everyone in the market. When Forbes Park opened in 1960s, it opened at 200 pesos per square, somewhere around there. And even at that time, when it opened, it was the most expensive property in the Philippines at 200 plus pesos per square. When it hit 1,000 pesos, 5,000 pesos, 10,000 pesos per square, people were saying, wow, how can we afford these prices? When it hit 50,000 pesos, people were saying, this is it na, and it's gonna peak and it's gonna drop. It kept climbing. Yes, we did have those rough moments between the 82 to 89, and we had another rough patch between 2008 to 2010. But outside of those years, There's also another one from 1998 to 2004.
Asian financial crisis.
The Asian financial crisis, and then the global financial crisis. Outside of those three cycles, it's been a straight line, and the boom has overcompensated for those drops in those years.
So there is enough properties, there are enough properties, there are enough buyers, there is enough demand, but the prices are too high. And you're saying that because there is an oversupply, then where do we draw the line? How does demand and supply meet at this point? If prices are not going to come down, then purchasing power has to come up. Now, inflation, of course, is going down. You have interest rates also going down. How long before you think property might see a boom again, especially in the luxury space?
Yeah, I think the luxury space continues to be undersupplied. So there's no oversupply in the luxury space. And I think a drop in interest rates will just fuel that even more. And this is not just Philippines, this is all over the world. What will drive interest rates back to near zero levels, like what we saw pre-pandemic? Well, I think you will see that when a massive crisis happens. A massive global crisis happens, and all central banks will say, oh, we got to cut interest rates to near zero. Wow. And that will stimulate stuff. Now, I'm not hoping for a global crisis to happen, but if you look at what's going on in China, if you can still see things in China, because right now there's a news blackout across so many levels.
On data, especially.
On data that you don't really know what's happening. But we do know that every developer there has defaulted on their loans. A lot of society across all levels are distressed and upset. Some have led to protests, which the government very well quieted. And the government said, you know what, to quiet all of this, we're going to release a lot of money and deflate interest rates and bail out a lot of people in the stakeholders in the real estate market.
Which brings up a couple of questions, but I'll have to ask that to you at the next part of the show. We're taking a very quick break. Keep it here on Follow the Money on the Billionaria News Channel. Stay with us. Welcome back. We're still with David Leechiu on assessing luxury properties. So off air during the break, I was asking you, coming from our discussion about demand meeting supply, of course, in the luxury market, two things. First, if the whole world is experiencing the same kind of phenomena, then how will the Philippines differentiate itself when it comes to luxury developments? And second, how will developers or property owners, be able to sell or move all their inventory at this point?
Okay, so there's a big boom in luxury properties since pandemic, more than we've ever had. The amount of money that's been released into luxury property has been unprecedented at a global scale. In the Philippines, we saw the best example of that in Punta Fuego. Punta Fuego is a village in Nasugbu. It's a beach resort community, 88 hectares. Nobody cared about Punta Fuego until pandemic happened. And because of that, we saw prices go from 20,000, 25,000 per square meter, going all the way up to 150,000 pesos square meter, pretty much in 12 months. And today, there are very, very, very few transactions happening in Punta Fuego today. And these prices are, again, at record prices. The most prime are probably fetching 200,000 pesos per square. So 10x movement in price in just 3-4 years. And you see that also in Forbes Park. Forbes Park, despite how heavy prices are, continue to appreciate 2 to 5% a year since pandemic. It might sound small, but we're talking
hundreds of millions.
Yeah, we're talking about moving from 800 million to 1.5 billion in a short span of time. So, and others would argue that that Forbes property should have come down during the pandemic, should have come down during high interest rates, but it didn't. It kept pushing up, even though it's doing so at a modest rate. And is it going to keep happening? I think it will keep happening. Now,
is that despite the work from home, people coming back to work, not staying at home anymore? How are these prices able to hold despite the pandemic behind us already?
It's a testament that the people in the luxury space have a lot of savings that allow them to tide the crisis. And they also worked very hard during the crisis so that they can tide the crisis better and ride the boom better in the next wave up. So one of the things we wanted to talk about was what's the Philippines doing to adapt to better,
to be competitive, to attract the foreign investment that you foresee will be coming to the Philippines in the coming years.
So one of the things we've seen with developers is they are employing better architects. So today there are 5 projects being designed by Foster and Partners. Foster and Partners is probably the most wanted architect in the world. So they've designed some of the best landmarks like the HSBC building in Hong Kong or the Burj but here they have 5 projects that will become landmark projects. One thing to highlight is like the estate being built by SM and Federal, and it's had a slow start. It had a very slow start because of the pandemic, but also because, to be fair, the market was uncertain if they can build the product to the quality that's been designed by Foster. And I think the market now is accepting the fact that Foster's happy with the work that's being done on the site, and the quality will be upheld. And now the buyers are starting to come in to the point where they are close to 80% sold. They're about 75, 76% sold today.
Is that where the trend is leading us, back to buildings, back to commercial and office spaces, whereas in the pandemic, maybe it was more resorts, maybe it was more residential spaces, but now is it really more office?
Yes and no. Well, yes, and not just office, because the estate is a residential project, and both SM and Federal Land, GT Capital, are finishing this project in about 18 months. And it will be one of the best places to live in around the world, designed by the best architect in the world. And it's not just SM and Federal. You've got Ali developing Park Villas. Park Villa is one of a kind project today. One unit there is 630 square meters. The entry point is 500 million pesos for a condo, and it's payable over 6-7 years, and they are now 35, close to 40% sold. The fact that Ali found 40% of the stock buyers at 500 million is a testament. And again, moving on, there's Robinsons. They're building and finishing this project called Aurelia, which has done phenomenally well. They've got maybe 15% of the units left inventory. In addition to that, you got to give them credit for what they've done in Cebu, because they have built probably the most bold, luxurious asset in Cebu, in all of Visayas, called New Star.
And fully sold out.
It's doing quite well.
In which case, which brings us to the final question, in this space, if we wanted to raise the competitiveness of the Philippines, we are drawing the top architects. You know, there is capital into these projects. There is money from investors coming into these projects. So what would make it easier for investors to look at the Philippines, you know, to consider it for either as a residence or as a work site?
That's a structural issue where people have to feel confident about the future of Philippines. And a lot of institutions are quite confident of and optimistic of the future of the Philippines. They think that by 2030, 2050, we will be the top 20 economies in the world. And that's a big thing. You know, they're confident that the Philippines will grow 3 to 5% a year every year for the next 10, 20, 30 years.
What do we have to do right?
What more do we have to do right? I think infrastructure spending, which is happening, investing in education, which thanks to Secretary Angara, Senator Angara, a lot of changes are going to happen positively under his realm to further education. I think nutrition is a big thing. Transparency, fighting corruption, you know, the usual basic stuff that we need to do to improve the country. And it is happening, and we're moving in the right direction.
On that note, the conundrum of luxury properties seems to lie in balancing exclusivity with market demand. Special thanks to David Leechiu for his invaluable assistance in assessing its potential contribution to our investment portfolio. Thank you so much for being with us today. We appreciate it. And before we go, we leave you with this quote from industrialist Andrew Carnegie: 90% of all millionaires become so through owning real estate. And that's it for today's edition of Follow the Money. I'm Raine Musñgi. Thank you so much for watching. Keep it here on BNC, the Billionaire News channel, always on top.